expat tax benefits, which one is the right one for you? So the two main ones is the foreign earned income exclusion and the foreign tax credit. Foreign earned income exclusion is where you can exclude a little bit more than 100,000 US dollars of foreign earned income from your US tax return. Foreign tax credit is where you use income taxes paid in your local country on your US tax return as a credit. Again, which one do you choose? Do you choose both? How do you know? Well, let's break it down a little bit. So with the foreign earned income exclusion, there are some limitations on what you can use it on. As the name would say, it is only on foreign earned income. So earned income is normally salary, self-employment, or even partnership income if you actively worked for that income. Now, the foreign piece means that it must be foreign sourced. Foreign sourced income in this regard means that you physically worked abroad when you earned that income. So even if you worked for a German employer and you're mainly based in Germany, if you have a 2-week business trip in the US, those 2 weeks that you earned income, not foreign, that's US source. And that goes the other way around as well. You work for a US employer, you get a W-2, but you're like, I'm not working out of the US, I'm gonna go work for a whole year in Spain. Well, that entire year of income you earned from a US employer, foreign earned income. You can use the foreign earned income exclusion on it. Foreign earned income exclusion is generally easy to claim, right? You would claim it on Form 2555. And it's super straightforward if you lived in a country, or abroad for over a year. Because if you're registered in a local country, you can use the bona fide residence test. Even if you're not registered in a local country, if you lived for over a year and you were abroad for over a year, it's still very easy to claim the physical presence test. So I would generally say it's the easier of the two expat tax benefits to claim. It's also great if you're not paying taxes. So if you live in a low income tax country or you just don't pay taxes because you're a digital nomad or you're not registered, this is also the way to go, right? Because foreign tax credit does not make sense if you're not paying foreign taxes. There are some big cons though. The biggest con is you cannot claim the additional child tax credit. So if you do have US children and they have US Social Security numbers and you would be otherwise eligible to claim the additional child tax credit, you cannot claim it using the foreign earned income exclusion. Another con is if you wanted to contribute to a US IRA, the use of the foreign earned income exclusion may actually make you ineligible because say, for example, you have $50,000 in foreign wages and then you use the foreign earned income exclusion to exclude the entire $50,000 from US taxation. Well, guess what? 50,000 minus 50,000 equals 0, meaning you have 0 taxable compensation, so you cannot contribute to an IRA at all. And one other thing I want to say is once you start the foreign earned income exclusion, you cannot generally stop. So you can obviously stop at any time, but once you revoke it, you cannot use the foreign earned income exclusion for 5 years. So basically, if you start it, you should be sure that this is the way you want to go because once you start and then you stop, it gets a little bit tricky in case you need to use it again in the next 5 years. Now, foreign tax credit is generally a little bit harder to claim on your tax return because of all the math that's involved. It's, how do I say? It gets complex. It can be simple, but it can get very complex. So basically, it's on Form 1116. And on this form, you'll see that there's a lot of different checkboxes determining if that income is general income, if it's passive income, foreign branch income, et cetera, et cetera. So what you need to do to claim foreign tax credit is you have to figure out, okay, how much income tax have I paid on a certain bucket of income? What type of bucket of income is that? And then from there, you decide how much foreign taxes you can claim as a credit per bucket of income. So that's just the start of it. Then you have to do basically another version of all of those forms. That's for the alternative minimum tax calculation. So you can end up with like 8 different versions of 1116 in your tax return, and they're all necessary just to calculate your foreign tax credit. So yes, it gets a little bit wild if you're doing this on an Excel spreadsheet yourself. Obviously, super easy to do in MyExpatTaxes. The benefits, though, may be worth it because if you have children that are eligible for the additional child tax credit, then by using the foreign tax credit, you could be getting up to $1,500 per child on your US tax return as a refund. Now, the other pro is that you're not excluding any of your income from taxation. so that you still have taxable compensation. So assuming that you're eligible to contribute to an IRA in, your income level, et cetera, this helps you to contribute because you have enough taxable compensation to contribute. Like I said, not always super complex, but can definitely get super complex, right? If you have a lot of different income streams. And it's obviously not ideal for low tax countries. So if you're not paying income taxes abroad or you're not paying that much, you can expect to still pay some income tax to the US because foreign tax credit is only to claim it as a non-refundable credit. But if the US were to charge you 30% and you've only, say, paid maybe 20% equivalent of foreign taxes, expect to still pay that 10% to the US. I hope you got a good overview of what the different expat tax benefits are, foreign earned income exclusion or foreign tax credit. You can use our handy dandy tax calculator to figure out what benefit is best fit for you, or you can jump right into myexpattaxes.com, enter in your income, and our tax engine will immediately figure out what is the best tax benefit in your case, and you'll even get an optimization schedule that shows you this is what your return looks like under foreign earned income exclusion, and this is what your return looks like under foreign tax credit. Thank you very much.